Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everybody, Ben Waynes here for top stock picks at Zacks alongside Brian Boland today. Today I'm looking at Vertiv Holdings, which trades under the ticker VRT. Vertiv is a digital infrastructure and continuity solutions provider that's crushed our bottom line estimates and boosted its guidance during the first 3 quarters of 2023, including a big beat and raise period at the end of October. Vertiv stock has also skyrocketed to new highs over the last 12 months, actually topping NVIDIA and Meta's huge runs. Yet it still trades at a solid discount to the wider Zacks tech sector and its own highs in terms of forward 12-month earnings. Wall Street also loves that Vertiv is benefiting from the broader AI investment cycle as companies big and small race to up their computing capacity to roll out those AI functions. So overall, the Ohio-based company's portfolio of power, cooling, and IT infrastructure solutions are designed to help its customers, quote, keep its vital applications running continuously, perform optimally, and grow their business needs. So simply put, if investors want to think about data centers, communication networks, and other critical technologies as really complex systems, Vertiv's role is to be operating in the sort of behind-the-scenes area that helps keep everything running properly and smoothly at all times. So the company went public via a SPAC back in late 2019, posting 14% revenue growth during its first full 2 years as a public firm. And then most recently, it posted 18% revenue growth in Q3 of 2023 and closed the period with a record high $5 billion backlog. It also nearly doubled its adjusted operating margin. And the CEO said in prepared remarks at the time that, quote, the industry is gearing up to deploy data center infrastructure needed to meet the compute capacity that AI is demanding. So that's what Wall Street's loving to see. So now we're going to go over and take a look at its website and then some of our screens and more on Vertiv. So I'm going to go over to this. We're going to start by just quickly looking at their website. So this gives you a sense of what they're offering. As I said, they're operating in the behind the scenes world to make sure all of your data heavy businesses are running as smoothly as possible. The business world and really the economy runs on big data these days, and Vertiv is playing a really key role in all of that. So overall, we can see that it's a Zacks ranked number 1 strong buy stock. It's computers and IT services industries in the top 21% of our over 250 Zacks industries at the moment. And then we can take a look. We're calling for about 21% revenue growth this year to go from about 5.7 billion up to about 6.9 billion, and then another 9% growth next year in 2024. And then on the bottom line, we're calling for massive growth, about 230% growth on the bottom line, 53 cents per share, all the way up to $1.74, and then another 27% growth on the bottom line. Next year is what we're expecting. And then we can see overall that Wall Street's really high in the stock. So 9 of the 10 brokerage recommendations that we have are sitting at strong buys. And we can see we've actually had a new brokerage recommendation within the last month. So that's a positive sign that more on Wall Street are starting to notice Vertiv. And then overall, this is looking at its longer term earnings revisions trends. So we can see that sort of right at the start of 2023, that these estimates started going up for 2023, especially 2024 and 2025, which is a great sign for investors. So we can see this gold line is 2025 and the light blue line is 2024. So those earnings revision trends are just sort of going straight up, which is a big reason for Vertiv's strength recently. And now we're going to go over to its price performance chart. We can see that it's up. So this was SPAC. So it went public here in late 2019. So we can see the stock's been on a bit of a wild ride overall, like the broader tech sector. So if we go over to the last 2 years, we can get just a better sense. It struggled alongside tech, but then if we go to the last year, we can see it's been on a big run. So kind of underperforming the market and then zooming off back in April. And we can see that it's now up 250% over the last 12 months. And as I said, that's outperforming Meta and NVIDIA. And then we can go to just a more technical focused chart to give a sense of where it is technically. So we can see, we'll go to the last 6 months. So we can see it's finding huge support along that 21-day moving average as it just rides higher and higher and higher. It actually hit new highs as I'm recording this on Tuesday morning, which is another good sign. It's still trading for about $50 per share. And some investors might like that price itself. And then we'll go over to its valuation levels. And then we can also see once this chart loads, we'll back this out to, say, 3 years. We can see that despite it trading at new highs and outperforming tech over the last year, it's actually trading at a discount to tech at 21.8 times forward 12-month earnings versus the Zacks tech sector, which is at about 24.6 at the moment. And it's also trading below its own highs, some of these spikes in near its median over the last 3 years as well. So that's a really great sign overall for the stock. And in general, Vertiv operates in a somewhat unglamorous area of tech. It's in the background, but that unglamorous area is very vital and of constant importance, which turns out to be a pretty striking combination for Wall Street that might make investors really want to consider VRT stocks. So that does it for this segment of Top Stock Picks. Now I'm going to send it over to Brian Bolin with his pick today.
Thanks, Ben, for handing it over to me. It's time for my top stock pick of the week. And as you know, I'm Brian Bolin, and I am the aggressive growth stock strategist here at Zacks. And I've got an interesting name for this week. This is a consistent grower. This is something that its products are pretty much ubiquitous. Probably never even thought about this, but I think it's a good name because it just recently bounced up against new 52-week highs. So let's get right to it. It's Pactiv Energy. Pactiv Evergreen. Who can talk? Not me. Pactiv Evergreen, and it's PTVE is the stock ticker symbol. It's a Zacks rank number 1 that makes it a strong buy, and it's got the A for value and the A for growth. I love to see that. A's all around. Not like my report card at all, but hey. So I'm gonna draw your attention down here. Take a look at this chart right in here. We see the beat right there at the beginning of November, and it is just up, and away for this stock. And so what is Pactiv Evergreen, and what do? Well, they make the containers, food containers, and you'll see them at most grocery stores, to put in, so liquids. If you go into the deli and you're getting the styrofoam things to get your food in, they're all over it. So it's a slow, steady, consistent business. They have thousands of partners. So the idea is maybe not making a lot per package, per item, but it's very difficult to unseat these guys from their current business partners. Okay, so let's take a look at the numbers we normally look at. We got a nice, huge beat, 260% skew in the average. 60% beat is great. A little miss here, and then another big monster, 190%, giving us 127% average over the last 4 quarters. Let's shoot up to our estimates. We can see, this quarter holding still at 6 cents. Nothing for the first quarter of next year. The full year, though, we've moved from 50 cents to 71 cents. We love to see that. Next year, going from 85 cents to $1. So we've got good earnings estimate revisions. I'm going to cheat a little bit. We don't really have anything for growth there. So let's go ahead and jump to our valuation. What are you paying for a stock like this that's got good, consistent, steady base? You're paying 17 times, right about the market. The value players love this. 1.7 times book, and not getting a full respect from the market on its price to sales here. We want to see that price to sales number much closer to 1, so it's a good chance for growing. Our margin situation is thin, at 2.6%, then dripping down and then coming back up. Contraction on the top line the most recent quarters. And not everything is perfect, but here we go. Let's take a look at the chart. And we'll do this as we kind of normally do. Pandemic, everyone's going to die. This thing comes out and we're all back to life, and this thing's up at $18. It tails in, and all of a sudden takes back off. So whenever you see something that has been in trouble, whatever, and now the market looks like we're going to have lower interest rates going forward, and a stock produces a big beat like this, and the stock comes back up to 12, is it unreasonable to think that this stock can reach 16, upper 15s in about a year? So I don't think that's unreasonable at all. I think a lot of people are looking for easier ways to get meals and going to the grocery store and buying in their pre-packaged containers is probably a good idea. All right, that's it for this week and our top stock picks of the week. Be sure to join us next time when we take a look at 2 more stocks from 2 more analysts. And until then, why don't you go to Zacks.com/promo to see all of our latest promotions.